Hello, very good dear subscribers, and welcome to a new video on the channel. Today we have the special monthly video reviewing my portfolio starting from €0 with you. Get ready to discover my June pick. As always, first I would like to analyze a little about the evolution of the YouTube channel and how I see it in a couple of months. As you can see, the evolution during this last month has been very positive since some days jumped in daily subscription gains, which was my best week with almost 100 subs. Additionally, we grow as much as I expected in the daily number of visits. The evolution continues to grow, and I am trying to make different videos schedule, which only one per week. Wow! This month we have exceeded the goal of reaching 1350 subscribers. So for this month the goal will be to reach 1,500 subscribers. Do you think we will make it? The evolution of the investment made in June has been so good, as it ups almost 11%, but in overall the portfolio has performed in a positive way with 2% growth. Comcast, Texas Roadhouse and S&P 500 Information Technology had growth, while Nike dropped around 17% due to expected revenue drop in 2025 and Hershey and NextEra Energy above 5% downside. Remember that this is a very long-term investment, and that the objective is not to obtain a high return in the short term, so this large drop of Nike since I made the purchase does not worry me too much since I fully trust my estimates of the intrinsic value of them. The good news is that during this month we have received 4 dividend payments. Specifically 49 cents of Texas Roadhouse, 82 cents from NextEra Energy, €1.08 from Hershey, and the first payment of Johnson & Johnson of 96 cents. That makes a total of €3.35. This month I am going to make a change in the way I choose companies, and due to the drop in growth expectations in the majority of the discretionary sector, I have seen the opportunity to expand one of my positions, Sturbucks. That is why this month I am going to compare 4 different companies in the restaurant industry, such as Texas Roadhouse and Sturbucks, which I already have in my portfolio, or possible new additions such as Chipotle Mexican Grill after its split this month, and McDonald's Corporation, which has fallen almost 20% so far this year. In order to better evaluate each section that we are analyzing, I have decided to create a Google Sheets table in which we will place the score obtained by each company, like the previous months. Let's start by checking the dividend safety. Both McDonald's Corporation and Texas Roadhouse have a dividend safety around 80, while Sturbucks has a dividend safety of 60. Finally, Chipotle Mexican Grill has a no dividend safety because it does not pay but has enough free cash flow growth expectation. Regarding dividend yield, Sturbucks and McDonald's have a dividend yield between 2.5% and 4.5%. That is the range I am looking for. However, if we look at dividend growth, the situation changes completely since the stocks that had a higher initial dividend are those that have the lowest growth. Even so, the growth of all of them seems stable, with the annual compound growth of the last 5 years being between 7.5% and 15%. Continuing with the evolution of the revenue and earnings of each company, McDonald's is the only one who has had a flat evolution, while the other 3 companies had a very positive evolution during the last decade. Now, if we look at the evolution of free cash flow per share over the last 10 years, the 4 companies had a positive evolution. However, while the evolution is positive, it is also very inconsistent with drop and ups. As I mentioned in my previous video, I want to make investments in companies that make buybacks. However, only McDonald's and Sturbucks have a clear buyback program since TXRH and CMG are companies with less market and more growth potential. And to increase their new restaurant, they used its remaining free cash flow to finance the acquisitions and did not have enough to make the shares repurchases over the last decade. The price/earnings ratio is a good indicator to check whether a company is undervalued or overvalued, in addition to a fair value analysis. McDonald's and Sturbucks are below the 5-year average price-to-earnings ratio, while Texas Roadhouse and Chipotle Mexican Grill above them, indicating an overvaluation of their respective prices. Moving on to yield on cost, here Texas Roadhouse is the clear winner with around 20% compound annual growth rate over the last 10 years. while Starbucks and McDonald's barely managed to have 9% compound annual growth rate on their yield on cost during the last 10 years. Finally, we will see the total return that each stock has offered during the last 5 years. Here, Chipotle and Texas are also the clear winners, while Sturbucks was the worst in this area with minus 3.67% total return in the last 5 years. Once we have all the values of the scores obtained, what I will do is multiply the average of all the sections by the score obtained in terms of dividend safety in order to more efficiently adjust the results to its security. Well, as you can see, Sturbucks has obtained the highest score due to his attractive price-to-earnings and buyback program. As a result, Sturbucks will be our pick of July and the first stock that I bought for the second time. Then we enter the Scalable Broker and carry out the operation, looking for the SBUX ticker. Remember that I will always try to make a purchase of around €100 so that the commission is less than 1%. So introducing 2 shares we would make an investment of €140.08, so adding the commission of 99 cents, the investment amounts to €141.07. I would like to emphasize that I made the purchase on the 3rd of May after a 20% drop in Starbucks price. Well, we go on to write down the purchases made in our Google spreadsheet. So I put the date on which I made the purchase, the Starbucks ticker, and finally I have to look at the euro to US dollar exchange rate to have it as a reference. As you can see, it gives me a total of €141.07. Since I have already placed the ticker in the first column, it has automatically added the number of new shares and the new average price per share. Additionally, this investment will allow us to reinvest 0.1 shares annually via dividends when before they were only 0.03. Impressive, right? As we are already in the month of July, I will move on to the monthly value sheet, and in the month of July 2024 we will write the €1,476.09 that our investments are worth in the market. This month the portfolio made an upside of 2.2%, which is half of the 4.43% that VOL S&P 500 ETF has obtained in the same time period. This has been all for today, dear investors. A pleasure, as always, to receive your great support. Remember that these videos are not investment recommendations, and it is necessary for each of you to do your own analysis and consult a financial expert if necessary. If you liked the video, don't forget to subscribe, hit the like button and activate the bell so you don't miss any of my interesting videos. Thank you for watching the video, and tell me through the comments what you think my portfolio will look like next month. Until next time,